Gold has now broken out to all-time record highs. So into the first week of March, gold prices have breached the all-time record high, breaking above 2,140 US dollars per ounce. So you know the mantra we've been discussing with you throughout the whole month of February, massive opportunities to be buying under $2,000 per ounce. As a result, over the last week, we've now taken the opportunity to bank over 8,000 points profit with our clients at the Gold and Silver Club. So again, we're not in the business of eking out small daily profits on commodities each day. We want to catch the massive impulse moves where we're going to be banking several thousand points. So of course, you know that calculation, but just in case you don't, for every one lot contract you'll be trading, that's over $80,000 of profit. For every 10 lot contract you'll be trading, that's over $800,000 of profit. Many clients at the Gold and Silver Club making over 6, 7, and even 8-figure returns to kickstart the month of March. So I do hope that you've also been absolutely crushing it on gold prices here, breaking out to all-time record highs. Now what's interesting is this comes off the back of many hedge funds and money managers being liquidated on gold over the month of February when gold prices dipped below $2,000 per ounce, which we discussed with you at the time, was nothing more than a massive buy opportunity. The catalyst and reversal point for that was off the back of the CPI data where we saw a bear trap in the market. Subsequently, gold prices rocketed off the back of Valentine's Day inflows that we saw on the Wednesday. We broke out through Thursday and Friday. As you know, Valentine's Day, typically you'll get an uptick in jewelry demand. This was the catalyst for a turn point on not only gold, but also silver, palladium, and platinum. Massive profits to be had across all of those markets. Now, not only that, crude oil prices over the last week did break above $80 per barrel. So we've stuck to our game plan, which is essentially to scale out of more profit on this breakout to the upside. We have 7 trades on oil. We've so far scaled out of 4 of those trades now, again, alongside gold, being able to bank over 8,000 points profit over just gold and oil. That's not even including all the profits we've now banked on silver over the course of this week, with silver prices breaking out over 7% just within the last week. And also platinum and palladium, they're starting their acceleration higher as well. Platinum is back above $900 per ounce. Palladium is getting much closer back towards that swing high of $1,000 per ounce. So yet again, there's been back-to-back opportunities for you to capitalize so far this year. So now what do we expect to happen next in the markets, given that gold has broken out to all-time record highs? Oil has also followed expectation, breaking out to $80 per barrel. Silver, as you know, we've been banging the drum, massive buy opportunities at $22, $22.50, $23 per ounce. Now you've got silver breaking out above $24 per ounce. So let me talk you through it. So as we go into the end of this week, we have the European Central Bank announcement on Thursday. Friday, we have non-farm payrolls. Then as we go into next week, we have CPI data. And then towards the end of next week, we have quad witching. What I've observed out there, a lot of trend trading systems are now getting triggered much later into the move. Now, this is good for us because we essentially just want to keep on making sure on these major news items, we use those for exit liquidity on the pumps to the upside, bank more of our positions on oil, on platinum, on palladium, on gold and silver and so forth. But what I'm seeing out there is a lot of traders have missed the move, and they're doing one of two things right now. Either they're trying to short the top, they're trying to time the top here on gold or on oil, they're trying to go for a sell short, and they're, as usual, getting chopped up a lot using technical analysis, or they're FOMOing in and buying much later into the move after they've missed this massive impulse move higher, where we have seen now gold from low to high move 1,500 points in the last 3 weeks. It's been a massive breakout to the upside, which of course we've capitalized with you at the Gold and Silver Club, and all of our clients have absolutely crushed it. So again, the main point here is that I am observing a lot of hedge funds are now flipping into their longs. So we've now got over 80% of hedge funds are now buying oil after it's already done over 1,000 point move over the month of February. So we're seeing them start to buy here at $79, $80 per barrel. The trap is potentially set there for a pullback as you go into quad witching next week. And also on gold, I'm observing a big switch here from funds starting to reposition to get exposure with gold. Of course, no one wants to buy gold at $1,800, $1,900 or even sub $2,000 per ounce, but everyone wants it above 2,100 US dollars per ounce. That's what we're seeing right now across the market. A lot of fund inflows are now coming into gold because it's catching attention now that it has broke out to all-time record highs above 2,100 US dollars per ounce. So if you've been following these commodity reports and what we've been doing in the market by accumulating nice and low, buy low, sell high, of course, rinse and repeat that cycle, you're not in a position where you need to FOMO in here at higher prices on gold, on silver and crude oils. Essentially, you're just in a position where you've got a windfall amount of profit, and your main question is, where should you be banking this windfall amount of profit? And the answer to that is just take advantage of news items over the next week and into next week as well as exit liquidity to bank further windfall amount of profit. So again, this really does come down to understanding the cycles in the market. So understanding the capital flows is extremely important. Further align that with the daily, weekly, monthly, quarterly, real-time data-driven cycle for each commodity. Further align that with the intermarket correlations, the ratios in the market, the key areas of liquidity that are targeted so you can get your sniper entries in, but also understand when to bank your windfall amount of profit. And then of course, further align that with data, statistics, market intelligence, and then finally further compound that with how the hedge funds, the money managers, the banks, the institutions, how they're all positioned in the market in real time. This, of course, is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.